Now I want to talk about high probability buy and sell signals, and they occur if the price actually drops below the channel. Now here's an example of the price. Here's the channel, and you can see the price drop below it, and it was below it for several days. So that's a high probability buy signal right there, whenever the price actually closes below the channel. Because normally it's contained within the two channels. Here's another one right here. It actually got above the channel. It closed above the channel. So that's a high probability sell signal right there. Here's another one. It actually got above the channel and went down. Got above the channel here, went down. Now here it actually closed below the channel, and you got a good buy signal off of it. So, and here's another one. Here's where it closed below the channel, and you got a good buy signal. So if it actually closes above or below the channel, it's a high probability signal. So you want to watch for those. It doesn't occur that often, but if it does, that should pique your interest, because those are high probability signals. This is Merck here, and again, it closed below and then it went up. Closed below, went up. Closed above and went down, and closed above and went down. So closed above and went down. So you always want to be watching for those. And again, you can use this with our trend confirmation indicators to help you enter a trade. And here's ExxonMobil, United Health. And again, you can see these high probability signals. There's one there, and there's one there. There's one there, another one. So you always want to be watching for that, because that's a pretty good indication. Now, you can also use the Keltner channels to help you select strike prices for short-term trading. And I'm going to cover this in more detail in another section coming up. But I was selling monthly call options for U.S. Steel, and trying to take advantage of the time decay, which occurs very rapidly the last month of it before option expiration. So I was buying the stock, selling the 1 month calls, and I was using the Keltner channels to help select the strike price. So if I owned the stock here, and let's say option expiration was about in the middle of the month right there, I wouldn't want to get an out-of-the-money call right there, because the odds are it's going to go down. So I would select an in-the-money call with a lot of downside protection right there. Now, the next month, if it's down here at option expiration, then I could do an out-of-the-money call, because I know that the odds are it's gonna trade back up again. So you can use this just as a general indication of whether you should trade in the money or out of the money options for short-term trading.
You do in the money option then most of the time?
The question is, do I do an in the money? I would do an in the money whenever the price is up near this upper channel, because the odds are that it's going to go down from there. And if you have it in the money, you're going to have a lot more protection. So the idea is when it's near the upper band, you want to sell an in the money call. It gives you more protection, because the odds are the stock's going down. And if it's near the lower band, here and here, then you want to buying out of the money because the odds are it's going to rally from there, and the out of the money would be more profitable.
Chuck?
Yeah.
The Keltner band, that's available by what?
That's available on stockcharts.com. Yeah, you just, it's one of the indicators. You'll have like Bollinger Bands and percent R and oscillators, and you just select Keltner bands and found those to be very useful. You can also use the Keltner channels to help you select stocks with repetitive and predictive price patterns. In other words, with ABC, Amerisource, you can see these are fairly predictable price patterns here. Whenever it gets up near the upper band, it usually goes down to the middle channel. So here's and then when it gets to the middle channel, it usually goes back up to the upper channel. So here it hit the middle, went back up, hit the middle, went back up, hit the middle, went back up, and so on and so forth. So that, to me, is I would rather trade this stock than this one, where you can't really get a sense of where you should be entering and exiting because there is no predictive price pattern. So the Keltner channels are real good in, again, further narrowing down your list of stocks to look at if they're in a fairly predictable price pattern. So it's helpful in that sense also.
What stock is the top one?
The top one is Amerisource. That's healthcare. And the top one is Intuitive Surgical. So again, that has repetitive patterns that you can see, and when it's in an uptrend, usually when it hits the upper channel, it retraces back to the middle channel, and then when it hits the middle channel, it retraces back to the upper channel. So that's pretty indicative of a price uptrend and a repetitive pattern there. And again, here's a stock that I would avoid just because there is no predictability. So that's another tool to use to help narrow down our list.